Hi everybody, Brian from Bear Bull Traders here. It's the weekend, Saturday, November the 19th. And of course, this is the weekend video. We'll take a look at what happened last week in the markets and look ahead in the coming week. It is going to be a very shortened trading week. We've got Thanksgiving here coming up on Thursday. And of course, Friday will probably be a much lighter trading day as well, as it always is after Thanksgiving. So anyway, let's start out by taking a look at what happened last week. So it was a bit of a choppy week. This week we were up and down. We did end up a little bit down on the week. The Dow essentially was flat, or almost no change at all. Down a little bit on the Qs. The SPY and the IWM obviously took the biggest hit of all. It was a choppy week. There were some signs of inflation that were easing, but some of the comments by several Fed heads, Bullard said during the week that rate hikes could take us to as high as 7%, which was not out of the question. I think he gave a 5% range. Collins, which is another Fed head, also said on Friday that a rate hike of 0.75% in December at their meeting was not off the table. And of course, everybody's now hoping for it to be only a 0.5% hike given the easing inflation that we got on the CPI number the week before here. The FTX fiasco, I mean, it continued to make headlines, but it certainly didn't seem to have a lot of impact on the market as more and more news came out on that. So in terms of areas of strength and weakness, obviously we went back to sort of the staples, healthcare as the biggest gainers, the safety trades, some of the more risk-on trades, consumer discretionary, basic materials, energy, they were the biggest losers. Energy, of course, down because if there is a potential for a recession, stuff like energy demand drops and stuff for demand for basic materials as well. So obviously, recession is on the minds of traders and investors. So on the treasuries, we were up a little on the 2-year. The 10-year basically pretty much unchanged. I think it was like 0.1% after the dust settled here on the week. US dollar was up slightly, but we had this massive drop last week of 4%. So it just it did bounce a little bit. And then, of course, Bitcoin, we're still, as of today, trading under 17,000, which is not bad considering all the things that have happened. I think there's some of the big players. I think this is my theory. Some of the big players, because there's some huge funds and brokerages that are now involved in Bitcoin. I think they're in there supporting it because they don't want to see it drop further. So I think the liquidity's really dried up on it, and I think they're just spending money to support it. That's my theory anyway. So let's take a look here at some charts. And as always, before we get into the charts, just like to throw up a quick ad for my book on Amazon, latest book, Profiting as an Active Trader. It's a guide to the trading tools, rules, strategies, and the routines of my stock and option trading. So if you want to check it out, there it is. So let's take a look at some charts. And we'll start out with a quick review of where we are with our treasuries. You can see here we're kind of flattening out on the 2-year. It's kind of just hanging in there around that 4.5 level. The 10-year, got a bit of a pullback here. Again, this is the widening of the difference between the 2s and the 10s. Again, that's called an inverted yield curve. And when the yield curve inverts, when the yields are lower, the further out you go, which isn't normal, it's often a sign of recession. So clearly, the bond traders are sort of pricing in a recession because they're expecting, in the short term, rates to be higher to bring down inflation, but in the longer term, they're expecting rates to come down because a recession will happen, and then the Fed will have to respond by lowering rates. So that's what's going on here. So transports on the day, I mean, we did sell off pretty hard here during the week. We did have a little bit of a positive end to the week, but well off the highs of the week. And you can see here, we did have a massive move up on this, so not surprising we're getting into an area. On the weekly, we are getting into an area which was prior support all along here. Kind of became resistance. We did sort of poke our head above there, but pulled back, and we're still on this 50 moving. Excuse me, the 50 moving average there. Volume really dropping off here as well as we're going through the weeks here. And the transport or the industrials, the Dow industrials, we've had like this massive move off this double bottom here. Really nice move up, bit of an ABCD pattern there, and now we're back up into an area where we would expect to see some resistance back from this high back in August. So we're kind of chopping along here, and you can see again this area of resistance right here has now become an area of resistance right there. So we'll just be watching to see if we can break out. Certainly things do get positive through the end of the year. November and December are usually good months in the market, so we actually may break out through this 34,000 level. So that's a pretty important level right here, and keep an eye on that one if you want to watch for a breakout. And you can trade indexes like UDow, for example, which is an ETF that trades based on the Dow. You don't have to buy the Dow directly. Anyway, the Qs again, we put in sort of a double pattern, nothing like the comeback we had on the Dow, because Dow stocks obviously became the place where money was rotating into. You can see here again this sort of 290 level on the Qs. That seems to be an important area in terms of support and resistance. Resistance in this case, we did reject right at this 20 moving average here. But again, watching for a breakout here, close above 290, and we could be heading back up into the 300s quite easily if we can start to break out here. Volume was pretty light on this pullback this week. The SPY, again, 400 is your level to watch for a breakout. Again, this is kind of where we're stalling out here, but we could, again, push back up into the 420s if we do get a breakout. That 420 number, obviously Elon will be very happy with that if we get that. Seems to like to price things in 420s for some reason. And again, here's the IWM. We're sort of range bound here, but again, if we're looking for a breakout, 187. Certainly feels like the market wants to go higher. We're definitely in an uptrend after this double bottoms that all the markets have put in. So we're definitely in an uptrend right now. Again, if we just pulled back, we made a bit of a higher low this week on lower volume, which is a good sign that we may move higher. Again, the VIX. Always an indicator of where there's fear, and there doesn't seem to be a lot of fear. The VIX was off 3.3%, 3.4% on a week where the markets were also down. So again, the volatility just coming right out of those, and the fear coming right out of the market. The dollar, again, we seem to be range bound right in here right now for the week, but massive move lower last week, as I mentioned in the recap. You can see here this big down week, and now we've just had a little bit of a bounce back at an area where you would have expected some support here. So we'll see what happens with the dollar. It seems like the dollar has broken this uptrend, and we may retest this trend line here, and we'll see if the dollar can remain somewhat weak. That will be probably good for the markets as well. Bitcoin, again, just holding in here. I've already given you my thoughts on this. I kind of feel like there's some big players that are in here supporting this. They don't want it to drop because that'll create more panic, more selling in the retail space, and then their investments will go into the you-know-where. So I think it's with the low volume after this last week of selling, I think that's what's going on there. As far as stuff as I'm watching this week, just keeping an eye on Apple. As goes Apple, so does the market. kind of what my thinking is. We're kind of we did this double bottom like we've seen in a lot of the indexes. Came back up here and we're back into sort of a trading range. You can see a lot of volume has happened in this area right here. So just watching this 200-day moving average on the daily, a break above that. But I kind of feel like we're going to, as far as Apple goes, we might just be stuck here. There's really no momentum. A little bit of momentum on the stochastics though, so it's still looking possible that it could break out through this 200 days. So keeping an eye on that 154.50 level could be a place to where Apple could break out from. Flex is looking kind of interesting to me. Picked this up off one of the podcasts, and yeah, it's looking like it's just broken out here. And I checked, was looking at some of the fundamental stuff, the PE ratios and stuff like that. Pretty well valued here. PE I think under 10. So, and it's in electronics, so it could do fairly well going forward. See if we get continuation move. Gold broke out of this. Really broke out of a couple of trading ranges here. We had this one that was sort of between here and here. And then this level here broke out from that. Now it's pulled back and tested this level and bounced nicely on Friday. This is quite often a pattern that you see: a breakout, a pullback to where it broke out from, this level here, and then we see a continuation move here. So I would be watching gold. GDX is the miner, is an ETF for the miners. That's the senior miners. GDXJ, if you had a J at the end of that, that's for the junior miners. They actually move more than GDX because they're more highly levered to the price of gold, and they do move better if you wanted to get even more beta on this. But some pretty decent volume on Friday. We had lower volume on these pullbacks 2 days here, and that's always a good sign on pullbacks when there isn't a lot of sellers. Just some profit taking. So momentum still looking to positive. I like kind of like gold here. We'll see if it can hold 27 on GDX. Target was one I traded after earnings. You can see here it had a massive run up into earnings. Disappointed, and you can see it had this massive drop down. But I really like the way it bounced back. So on the Wednesday, actually in the trading room, I actually said I was taking it long here around 152. I said it would hold some as long as it sort of stayed above that level. It did manage to stay up above that level. I said 160 was my next target. It did take some off at 160 on Thursday when it went through there, and now I'm kind of looking for this sort of 167 level for my next exit on that swing trade. So if you're in the room, you would have heard that call and maybe been able to look at it and decide that it might be a good trade for you as well. IWM, TNA, I'm just watching this. If we do get a really decent rally and people start feeling good about no recession, IWM is going to kind of lead the way. So I'm always watching TNA as a trade for that. Tesla's kind of just it's a disaster. I don't know how else you want to say it. I mean, Elon right now, I think people are kind of worried he's distracted. With Twitter, he's kind of had a lot of issues and challenges since he's taken over. People leaving, so I think he's going to continue to be distracted, and I think Tesla is still looking fairly weak here. I think it's going to drop some more. This is the weekly. We've already lost these levels right here. These are going back to 2021, and we've already just broken down through those levels. So I think this area here where we broke out of, which is around the 150, you got 160 as a 200-day moving average, probably will be significant support at 160. But I think you've got more downside on Tesla for sure. And let's see what else we got here. Still watching uranium. Uranium's not really doing very much. I do have a small position and I'm not really too happy about it. Oil has been sort of chopping in a range here for a couple months now. I kind of feel like we're down into an area where we've had some significant support before. Here. We did come down there on Friday, bounced off it. So I do have a small position on oil right now. So through a Canadian ETF, I am waiting to see if this thing can hold this 67 level on USO, or if we have further downside, because there could potentially be further downside down to this area here. Certainly momentum isn't very good, and stochastics, MACD, they're all pointing to a further decline. So I may be stopping out of this on Friday. I am up right now on it, just because I managed to get it when it started to turn around and head back up, but that may be wiped out if we still get a gap down on Monday. XLE, this is the way to play oil. You can see oil sold off quite a bit, but the energy sector itself has been pretty strong. You can see here, still holding this 200-day moving average. We are sort of looking a little toppy here. We did have a nice comeback on Friday. All of these sell-off days are getting bought, at least Thursday and Friday. So yeah, like I said, I'm playing it with an energy sector fund right now, and hoping we'd get a bit more of a bounce on that one. And that's it, everybody. So the week ahead, November 21st, again, as I've mentioned earlier, Thursday is Thanksgiving. The following day, Friday, usually is a pretty light day of trading, so it's going to be a really shortened week this week. Here's your levels on the indexes. They really didn't change very much at all from last week, and neither did the support and resistance levels, as we just basically chopped this last week. So what do we got coming up for economic events Wednesday? We do have durable goods orders coming out. We've got some new home sales numbers coming out Wednesday morning, and a consumer sentiment number that's coming out at 10 a.m. So people watching, see if there's any drop in consumer sentiment. That would be good for the markets. So again, Thursday, the holiday, Friday, probably light trading day. And as far as earnings go, we did have a big week last week with a lot of the retailers. So this coming week, we do have some interesting stuff coming up here. Zoom and Dell after the market on Monday. We do have that's Best Buy, Dollar Tree, a Chinese, the Baidu, and Dick's. That'll be another retailer. That'll be interesting. We do have JWM. That's Nordstrom's after the market on Tuesday. Deere on Wednesday. Deere, of course, agriculture and construction. Sort of, we'll see what happens there on Wednesday morning, and then that'll be kind of the week will go quiet from there. So that's it, everybody. I hope you're all having a great weekend, and looking forward to another trading week ahead. As always, we will be starting 8 o'clock a.m. Engineering the markets, and then of course 8:30 pre-market show looking at the movers and shakers, and for our members 9:30 we will be trading the market open. So hope to see one of all of those things, and we'll enjoy the rest of your weekend, everybody. Bye for now.